Nice. This is my favorite part of the month. You know that part where I get paid for doing absolutely nothing? Because a dividend is like a glass of wine. It's always good to have some. Welcome to this October monthly income report. Let's roll the intro. Dividend investors, bonjour. This is Mike Leroux, founder of Dividend Stocks Rocks, passionate investor, and father of 3 amazing children. I want to start this video with a big shout out to all the parents and grandparents watching this video, because if you're listening to me right now, this means that you're one step ahead in your investing journey. You're taking control over your portfolio, over your personal finance, and this is not only a good thing for you, but for your children and your grandchildren, of course. So we thank you all. October is always a very important month in the year because everybody has gone back from vacation, everything is settled, and now we're ready to digest a huge pile of data and earnings report. We usually start the earnings season with American banks roughly around the second weeks of October, and by the time that Halloween hits, we have done so much to study. This is also a great period of fluctuation in portfolios because there's a lot of data to digest, and then the market is going like right, left, and center. In my personal case, my portfolio is up by $1,865.88. So that's a pretty good return, roughly like a little bit more than 1% return for the month of October. Can't complain on that. Most of it is paper profit though, meaning that it's just stocks value going up. I only received $57.89 in dividend. This is actually the smallest month of my quarter, mostly because National Bank used to pay me on October last year, but this time I received the payment in November. So obviously I'm expecting a big jump in dividend payment next month, but just because of this date technicality. Overall, my portfolio did well. Most of the value upside came from the US market, and this leads me to what I want to talk about today in my market commentary is the importance of diversification. Now, I'm going to pull out my asset allocation right there on the screen so you can see how I invested my money since 2017. When I created that portfolio, my goal was to have an average weight of roughly 5% for each position. So I want to have like something that is mostly equally weighted. The rationale behind that is I want to make sure that I'm not getting hit too hard by a bad news on a specific stock or a specific sector. On the other side, I want to make sure that I have enough different position and touch different sectors. So this is why I need at least 20-25 position in this portfolio. Now, if you look at the allocation by sector, you'll notice that I only have 2 major sectors, which is consumer cyclical at 27% and financial services at 24%. I usually recommend not exceeding 20% for a specific sector, mostly because you don't want to have a single event crashing down your portfolio. Obviously, when you look at my portfolio, you say, well, Mike, you're kind of like not getting to the point here because you're not even following your own advice. The difference is when you look at the consumer cyclical deep inside my portfolio, you'll see that I have various different subsectors. So I have like Gentex and Magna International that are part of the automotive sector. I have Starbucks for the restaurant. I have Disney. So I have like plenty of subsectors inside, so not one single event will crush that part of my portfolio. And I did the same thing for financial services, where I have Canadian banks, I have asset manager, and Visa, which is halfway through a tech stock and a financial stock, but still falls into the financial sector according to YChart. That is part of this portfolio. The reason why I wanted to tell you about sector allocation and the importance of diversification is while I nearly made $2,000 in this month, I also lost $1,500 US dollars, so almost the full $2,000 that I made actually, I lost it among Hasbro and Texas Instrument. So Hasbro has a terrible quarter and the shares are down 18% versus last month, and Texas Instrument missed expectation, issued weaker guidance, and this led to a slip of 8% in my portfolio. Now, this could have been a very bad month for me, and I should be talking about how I lost $2,000 Canadian money instead of telling you how I made $2,000, right? But the thing is, a lot of my other stocks in my portfolio went up at the very same time. Why? Because I have a great diversification. Not because I'm a genius, not because I knew things that you didn't know, just because I decided to have an equally weighted portfolio, well diversified across plenty of sectors and subsectors. So while two of my stocks took a beating on the market, I had like great results coming from Apple, 16.28%, BlackRock up 13%, Lazard up 9.13%, and Gentex up by 8.54%. So basically, while you have some of your stocks going down, you have some others going up, and this all balances out. And when you look at your month, you don't feel too bad losing money for a couple of stocks. Now, this doesn't mean that I should not look deeper into what happened for Hasbro and Texas Instrument. Obviously, the market is sending me a strong signal not to sell, but to investigate. This is what I call a red flag. So what I did is I went into the quarterly earnings for both companies and tried to make sense of what really happened there. As is usually the case for stocks dropping down like a rock, it means that they miss analyst expectation and they usually issued weaker guidance. This is exactly what happened for both companies, Texas Instruments and Hasbro. In the case of Texas Instrument, the third thing that hurt the portfolio is we're not seeing the end of the trade war. This pushes many companies to destock what they have. This means that they're selling what they have and they don't buy too much to keep it in stock. We see that in several industrial subsectors and automotive as well, where analogs and other semiconductors are making a lot of money right now because of the Internet of Things. This is why Texas Instruments is going to go through a rough time, but it's just part of the down cycle of the investment cycle right now. I'm not afraid because Texas Instruments remains a leader in analogs chips, and they still have a huge team of marketing ready to knock on doors and sell more of those chips and analogs products. Going forward, automotive and industrial segment will continue to need those parts from Texas Instruments to improve the Internet of Things, to improve their products with IAs, and this will cause more revenue growth down the road. In the meantime, I just have to remain patient. The dividend keeps getting increased and the stock is still doing well. And finally, we see a similar situation with Hasbro, as they are also hurt by the commercial trade war. Lots of retailers are afraid of potential tariff that's going to happen on those toys. Then again, we're seeing destocking. So basically, the same event affect two companies in two different sectors, but that are linked with the same thing, the trade war with Chinese. Whenever this will end, you're going to see both companies going up very fast. Mind you, a quarter ago, both companies beat analyst expectations and those stocks went up double digit. So those are the companies that are more likely to suffer from great variation upon earnings day. But if you're patient investor and you look at your investment thesis and they still make sense. I mean, Hasbro's still making action figures for Star Wars. Frozen is coming up in November. And so you'll see big sales over there, and it's going to continue to do well for Hasbro and Texas Instrument going forward. Just have to be a little bit more patient. And the core business hasn't been touched. It's just a temporary event affecting their numbers. So let the noise go. Keep your heads down to your portfolio and make sure that your company are able not to only pay their dividend, but increase it. And this is why I'm keeping both Texas Instruments, and Hasbro in my portfolio. Now, if you want to know what happened with Apple, BlackRock, Lazard, and Gentex, which are my big winner this month, just click in the link description below, read my blog about my income statement, and you'll see all about it. I'll see you in the next video, and until the next time, stay invested!